is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors. Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Good afternoon, ladies and gentlemen. Welcome to Market Today on Business Today Television. I am Shail Bhatnagar, and let's look at how the markets are performing on this fantastic day. Almost 21,200 for you on the Nifty. The gap up that we saw of about 84, 85 points in the morning is now getting better. The index is up 270 points, 1.3% higher, fresh record high on the Nifty, and the Nifty Bank at 47,800 has rallied 714 points in front of you. The superstar for the day is the Nifty IT Index, 34,190, up a whopping 3.4%, which is about 1,100 points. And all this and more is simply because of the pivot that the US Federal Reserve has taken and said that enough of interest rates hikes in the US economy. Now we shall look at cutting interest rates over 2024. Apart from the frontline counters, of course, it's the big boys day today. There is hectic activity in the cash market. I'll tell you the stocks which have been the most active. You have IRFC up about 12%, 93.45. 3,927 crores worth of shares have been traded. HDFC Bank, 2270 crores shares have been traded, 1.3% higher. HUDCO, a fresh record high here, 111.80, 12% higher. 2,034 shares, 2,034 crore shares have been traded. In the list of NSE 500 among the top 10, you see newer entrants making their presence felt who are from either the PSU basket or they are definitely high beta, low ticket items. What we'll do is, let me just tell you how the show is being planned. Sharad Avasthi is with us. He's the head of research for the private client group at Smith's Securities. Between 2:30 and between 2:50 and 3 p.m. we'll be discussing the IPO of DOMS Industries. Remember, it's a 1,200 crore IPO, already subscribed by about 31 times. And towards the fag end of the show, Mr. Sudeep Shah, Deputy Vice President, Head of Technicals and Derivatives Research at SBI Securities, will be joining us. But for the moment, it is Mr. Avasthi with us. Namaste, Sharad ji. What a pleasant day to have you on Market Today at BTTV. Everything seems to be working fine. अमृत काल चल रहा है स्टॉक प्राइसेस का, हर तरफ तेजी है. बताइए क्या महसूस कर रहे हैं और क्या करना चाहिए आगे?
नमस्कार जी. Broadly, I think it's a good market. अभी भी if you look at valuations, ऐसा नहीं है कि they are into bubble territory. I think you may have another 20-25% before we reach bubble kind of zones. And if that is accompanied by earnings improvement, which we do expect to happen over the next at least one quarter तो होना ही चाहिए, उसके beyond भी we are expecting that to continue. So broadly, I think the rally should continue. Maybe after this up move, maybe we'll further extend this over this month, and then maybe take a breather for a month or two before the elections, though the budget is a no-brainer this time around. But I think more or less the election uncertainty is out of the way now, and with interest rates coming down globally more or less certain now, I think there will be a risk on where more flow will be visible to the emerging markets. India will be in a sweet spot to take advantage of that. The shift from China is also getting more intensified now, and we can see changes on the ground. Earlier, we only used to talk about it for a very long time. So I think many good things are happening for India. A stable government internationally, we are getting the acclaim that we should get. Locally, the PLIs are doing their job. Rural India is finally starting to contribute very aggressively to the growth, and I think that is one place where we should keep a very keen eye on. So I don't think we are still anywhere near the peak. The peak is still a bit away from
Correct.
current levels. So I continue to be bullish.
Okay, so while this is a record peak in terms of stock prices and the Nifty and the Bank Nifty today, but that doesn't mean that higher and better peaks are not ahead. That is what Sharadji is trying to point out. Sharadji, what I'll do is I'll just mark up a couple of stocks in the broader market and then I'll come back to you. The Nifty's advanced decline ratio, ladies and gentlemen, at the moment is 37:12. If you look at the index gainers and losers, it is Infosys which is contributing about 46 points to this sharp upsurge of 270 points. The stock itself is up 3.4%. ICICI Bank record high for you. Contribution for today is 37 points. Reliance up 1.6%. Contribution to the Nifty's gain is 33 points. HDFC Bank up 1.2%. 22 points to the overall gain of the Nifty, and TCS 19 points to the gain, up 2% at 36.68. The losers are so minor that it is completely irrelevant. In the broader market, we track 19 indices for you. Out of 19, 18 are in the green. The Nifty Media Index is the only loser, and that's not even a loss to talk about. So very, very strong gains coming on the IT index, 3.3% higher, 34,178. Sharadji, coming to you, the star performer of the day has been the IT index, now at a 20-month high and still counting. We have about 45 minutes left. If you could explain why this has happened, and is there likelihood of this rally continuing? What do you like in this space?
Firstly, I do certainly think that this rally is going to continue. The primary reason being that US was expected to go into a slowdown, and now with interest rates coming down, most probably the commentary regarding the US numbers will substantially improve going forward, and the mood on the street would also be much better. I think there is a possibility that most of the downward revisions that had happened to the numbers over the last, say, 6 to 12 months, you could see a strong upward revision trend happening over the next 2 to 3 quarters. And that should be seen as a very good re-rating candidate for most IT stocks. Valuations per se are not expensive. My top bet among the larger players would still continue to be Infosys. I think a lot of re-rating can happen in that space. If you want to look at something where a lot of re-rating can happen, I think LTIMindtree is one story we are betting very heavily on. I think that is a story with the new management inductions happening. The BFSI segment could grow very handsomely over there. That should help them. LTIM has seen the first round of movement, but I think there is scope that you could see a lot of improvements to the numbers there also because of the integration benefits. Among the smaller numbers, I think Infosys obviously stands to benefit, has already gone up a bit. One more smaller company, I think Mastech could be a very good bet. I think valuations are very comfortable there. And
Absolutely.
we are very hopeful that we should see very good run up for Mastech from current levels.
Okay, there is no let up in the kind of movement that we are expecting in the markets, and of course, since the major indices apart from the major sectoral indices apart from the IT index have already hit a record high, it's only a matter of time that you see this kind of a sharp move coming in as far as the Nifty IT index is concerned. And Sharadji is absolutely right when he says this kind of gains are here to stay and will probably be after a bit of consolidation get higher and higher. I was looking at the list of Sharadji in NSE 500, the top most active counters, and there is a list of new names. There is IRFC, there is HUDCO, there is Steel Authority of India. What do you think is happening within the PSU pack? Although I'm very hesitant to take a technical or a fundamental view at this point of time, but just what is the view when you look at such counters?
I believe each of them has a different story to tell. If you take these three names only, say an IRFC, The valuations might look a bit stretched, 2.3 times price to book, not much growth expected over the next 2 years, flat 5 rupee kind of earnings. But I think the way the railway expansion is going on, and you don't have an NPA risk over there, that's a very big advantage that they have. Most of the funding is to the railways. So there is a possibility that if that aggression continues, you could see a very good re-rating on the forward numbers for IRFC. And then that should translate into higher numbers. So there is a possibility that the growth could be much better vis-a-vis what the market is expecting right now. So that is one space, and the railway aggression is already known to us. Hudco, in spite of all this run up and everything, it's still trading at 1.3, 1.4 times. The real estate growth, I think, is here to stay, and Hudco should benefit out of it in the long term as well. They have not garnered so much market share in the past, but I think now with the growth being so sanguine and so spread out, even Hudco would benefit out of that, and there is a possibility that valuations catch up. Regarding some of the other names, I think metals, particularly SAIL, etc. There, I think green energy is something that could be a costly. Green steel or green manufacturing is something that would be a cost headwind for most of the metal companies. I'm not expecting a runaway kind of rally, but there is another school of thought which believes that with the dollar weakening, there could be a strong metal rally you could look at. So that is one thing I think the market is anticipating, that if a dollar weakens, I think most metals could see a rally. Yesterday also, we have seen some improvement in the precious metals also. So I think that is a contra bet on dollar. But standalone, if you leave apart the currency movement, I think standalone, I can't see much of a very highly optimistic outlook for metal companies.
Fair point. And in my enthusiasm about talking about the record highs that we are seeing, Sharadji, across the markets, I missed out your two top picks for today. Anything that catches your fancy even at these elevated prices, what can be added over the medium term in the format of a monthly SIP as far as individual stocks are concerned? Where do you see value?
I think one stock we are liking is BEML. I think the combination of railways, defense, along with mining equipment, etc., they are in a very sweet spot, and I think growth rates would be very handsome for them, not even accounting for a windfall of further orders coming into it. 12,000 crore kind of order book, they could grow at a very healthy clip. So I think BEML is one story we are very bullish on. We think forward numbers could look very good, while most other stories, whether railways or defense, are dependent on future windfalls that come into the kitty, because of which a lot of re-rating can happen. BEML, even on current numbers, should clock in very healthy growth rates over the next 1 or 2 years, and that should help them. So I think BEML is one story. And the other story we are recently looking at is Blue Dart. The stock has seen a bit of correction. Earnings growth over the next 2.5 years should be very good. And I think even ATF prices should gradually come down. That should also help. There have been some headwinds on that side. And they have expanded into Tier 2 cities also. We have 1,000 plus Tier 2 cities. So that should also aid them. So I think both stocks look decent for at least 30-35% upside from current levels.
Wonderful. And Blue Dart till about 3 days ago was, of course, at a record high. BEML is also stretching its arms upwards, the part of the defense pack, and that's seen a fairly strong traction coming in. The all-time high for BEML was stuck on September 11th, and this was at 2720. At the moment at 2502. Let's see what happens, but it's the fundamental strength that Sharadji points out when it comes to this particular counter. Let's shift focus again to some of the spaces that are showing very high traction in terms of demand, and that's the IPO space, Sharadji. 3 IPOs are at the moment gaining investor attention. DOMS and, of course, India Shelter come to my mind. Anything that you would like to qualitatively add on these two? What are you advising your customers? What are you advising your clients and investors to do?
Both the issues we have advised to subscribe. I think they are in unique positions. For DOMS, I think the facility that they are putting up could result in substantial up move in rise in the profitability. At full capacity or optimum capacity utilization, you could see the earnings double. So it might look a bit expensive on the basis of historical now, the type of growth that they have achieved and the dominant positions in the pencil side. I think with the art and this thing, specialization. I think even my son does a bit of sketching. He also prefers the DOMS pencils. So there could be a bias in my head. But otherwise, also, I think the numbers are good and there could be very good growth for DOMS going ahead. Uh, at full utilization, I think they could double from here. And once you look at that, then the valuations don't really look that expensive. And for India Shelter, again, valuations are inexpensive compared to the peers. And I think they would also grow at a very handsome rate. And the NPS have been under control. Easily stocks like these, if they continue to grow at these rates, they could get 3-4 times. Primarily LAP, the LTV is good, so I don't think there would be a lot of hiccups going ahead. So I think there is a scope that it trades at somewhere around 4 times, and the growth should be very good. Even the half-year growth has been very good. So both issues are very ideally placed. I think they should see very good listing gains, and earnings trajectory should be very strong for both companies.
Okay. In a while, the MD of DOMS Writing Instruments, Mr. Santosh Rosiklal Revashia, and Mr. Rahul Shah, CFO, will be joining us to discuss the bare bones details of this IPO. But it's a thumbs up sign from Sharadji, and a large part of that thumbs up is because his son uses DOMS pencils. By the way, 29% of the Indian pencil market is controlled by DOMS. Let's see what happens. But for the moment, like I said, it's a feeling of missing out on this rally, and everybody is wanting to jump on the Nifty bandwagon. If you look at monthly SIP numbers, that's rising dramatically. If you look at participation in terms of retail, that's really huge. Foreign institutional investors have started buying with a vengeance. So it's like a Goldilocks scenario panning out on Indian stock markets, and more the merrier. So it seems the index days high 21,185 for you, 1.24% higher. Remember, the gap up of today was about 184 points, and beyond 184 the index has not lost a single digit, and beyond that it's actually added to its traction. Apart from the pullers and draggers that I have mentioned on the Nifty, I'd just like to mark a couple of other shares in this index that are doing phenomenally well. They may be individual lightweights, but nonetheless the rally is fairly substantial. Tech Mahindra 4.1% higher, it's at 1271.60. HCLTech, one of those counters that hit a record high. In fact, the only large cap IT stock at a record high, 1419 for you, 3.3% up. Wipro 3% higher, 434. This has been a major laggard. After a while, we've seen the return of IndusInd Bank, 1558. The counter is up 3%. The Bajaj twins up more than 2.5% each. M&M and TCS up around 2% each. I'll also mention the record highs that this market has hit in terms of the Nifty. Of course, ICICI Bank and HCLTech come to the mind immediately. The other stocks at all-time highs are L&T 34.31 up 1%, Adani Ports 0.5% higher, 1071, NTPC 96 up 0.5%, Bajaj Auto, Titan and Power Grid. These are stocks at blue sky territory as far as the index is concerned, and in a while shortly we'll be joined by the management of DOMS Writing Instruments. But before that, we'll take a quick break, and on the other side we'll be discussing the 1200 crore IPO of DOMS Writing Instruments. Stay tuned.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes, Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-risking the Future in collaboration with Business Today.
Welcome back to Markets Today. Fantastic day for equities on the Lal Street. Record highs on the Bank Nifty, record highs on the Nifty. You have 21,200 almost on the index, and this will be the first time in Nifty's recorded history that the index will be closing well above the 21,000 point mark. Remember, the gap up in the morning really pushed bulls to their maximum, and of course today being the weekly FNO expiry as well, there was a lot of short covering that came our way. Be that as it may, if the secondary markets are hot, it's the primary markets that are super hot. And joining us is the team from DOMS Industries. Remember, this is an IPO which is open for the second day today, and with us are Shri Santosh Rasiklal Revashia. He's the MD of DOMS Industries, and Rahul Shah, he's the CFO of DOMS Industries. Good afternoon to you, gentlemen. The 1,200 crore IPO has been oversubscribed majorly in the second day itself, in fact on the first day itself, so our congratulations are due. Let's just break down what the proceeds are going to be used for, and then find out more about your wonderful company, sir. So this is my first question to Santosh ji. What are the proceeds going to be used for? We have 850 crores which is the OFS and 350 crores which is the fresh issue. Santosh ji.
I would like to say, sir, here that these proceeds are mainly going to be used for our expansion for writing instruments. So early this year, we have acquired 44 acres of land, parcel here in Umargaon, Gujarat, where we have all existing 13 manufacturing plants. On this particular 44 acre of land, we are looking forward to invest around 450 crore rupees on this particular expansion, out of which 73.5 crore of investment is already done on land, and the rest 280 crore will come from proceeds of IPO, and the remaining will be from the internal accruals what we generate.
Okay. Yours, sir, is a very, very competitive industry, although you have about 12% overall market share of the stationery and art market. And just before you came on the show, there was this gentleman who said that his son uses the stationery and the other instruments from DOMS for his painting. So our congratulations for this kind of a market share. But what exactly are the plans of DOMS Industries from now on? This money, of course, will go into creating fresh capacity, but what now from then on?
So, sir, we are right now operating and serving to our consumers and customer with 7 different categories. And these categories are such as scholastic stationery, scholastic art, paper stationery, kits and combination packs, office supplies, hobby and craft, and fine art. And so you will see that each category on its own is a it's a very fast moving spectrum. What we would like to do here is that, sir, each category we would like to grow, because as of now the challenge for DOMS is to service the need of the customer. There is in total it is a extreme pull which is from the market, and for us it is important to make to serve this particular pull in the right time. So to do that, what we are doing is, currently in our existing plant, we are first trying to optimize all our infrastructure, where we have the lower capacities machine, we are converting to higher capacity machines. Lower capacities mold are being converted to more cavities of molds. Also, sir, we have around 200,000 square feet of construction which already is in place, out of which 100,000 square feet of our plant is ready, partially under installation and partially under production. And also another 100,000 square feet will be getting the possession of that particular plant in another 6 months. So we are looking forward to increase our capacities of all our existing categories, where we are right now in short supplies to our customers. And also there are certain categories which are going to be added further.
Okay, let's get Mr. Rahul Shah in the conversation. He's the CFO of DOMS Industries. Mr. Shah, let's look at the top line. At the moment, the number in front of me for March 23 is 1,212 crore rupees, and this is substantially higher from the 684 crores that you stuck in March 2022. First, tell us how the first half of the current financial year has panned out, and if you can share with us how things look 1 or 2 years from now as far as sales and profit after tax is concerned.
Yeah. So just to give you a background, we did about revenues of about 400 odd crores in FY21, then about 680 crores in FY22. Basically, these 2 years were, a COVID impacted period for us. Since our major sales happened around educational institutes, with this being shut due to COVID, in these 2 years, we faced a little lack in demand. But with 2023, with COVID restrictions being lifted, and there was being a lot of pent-up demand in the market, we were able to achieve a healthy growth of over 77% in FY23, where we did about 1,212 crores in terms of top line. 2024, the first 6 months are something which we call as a normalized period. And in this period, we've done sales of about 761 plus crores. In terms of margin, our margins have improved over the last couple of years. We did about 15.4% in margin, EBITDA margin in FY23, and for the first half, our margins were close to 16.7%. This margin expansion has been a result of better operational efficiencies with the size and scale that we've now achieved, as well as some positive impacts because some material prices have been slightly lower. At the same time, we've been able to increase the average selling prices of our key products, resulting in better operating margins for first half 2024.
Okay. Mr. Shah, can you share the half-year profit that you clocked, and what was the full-year profit in March 2023?
So March 23, our PAT was close to 103 crores. And in first half, we've done about 73 crores, which is about 9.6 times our sales.
73 crores is the PAT in H1 23, and what is the sales?
761.8 crores.
Okay, 762 crores. Okay. So it's roughly a 9.7, 9.8% NPM. Okay. Yeah. Let's get down to the basics. When you look at the price at which you are offering the share, 750 to 790, it's basically at a price earnings multiple of 50, and the price to book is 6.2. Very, very expensive. When you look at your peer set, the average is just 30 when it comes to the PE, and the price to book at 4.7. How do you justify this premium?
So, just to give you a background, DOMS as a company is a little different from probably our other peers. We have one of the most diversified product range when it comes to stationery. We have more than 25 plus products which we sell under 7 different categories. At the same time, one of the key factors, for our success has been our focus on R&D, where we have, more than 50 people who helped us to get more innovative and improved products in the market, as well as at the same time our manufacturing infrastructure. Today, across almost all our product lines, we are all are made in-house. We don't believe in trading. Everything made in-house and completely backward integrated. So these are a few factors, along with our distribution network, which is where we are spread across more than 1,20,000 retail touch points in India. So these are the factors which differentiate us in terms of pricing. Like you would be aware, pricing is something which is determined by the BRLNs based on the feedback that they receive through the various roadshows that we do with institutional investors, and that's how the price has been derived.
Okay, let's get Mr. Santosh Revashia into the conversation. Sir, any plans for some acquisitions with the money that you get?
So basically, if you see historically, in 2015, we had this acquisition in place, which was Microwood, which was Pioneer Stationery Private Limited. Through this particular company, we got access to paper stationery as a category. Here, sir, when we invested, the investment in 2015 was around 4 crore, for this acquisition. The turnover of this company was around 4 crore when we acquired this company. And in 2023, we were able to reach 138 crore from this business. So, sir, we strongly believe that with partnerships, we have been able to grow much well. And going forward, if there are attractive opportunities ahead, we would certainly we would be happy to explore. But nothing as of now we have in place.
Okay. With that, Mr. Revashia and Mr. Shah, thank you so much for joining us and sharing the details of how the IPO proceeds will be used at DOMS Industries. Of course, ladies and gentlemen, it's a 1,200 crore rupee IPO priced in the vicinity of 750 to 790 rupees per share. And the gentlemen have already managed an oversubscription of 30 times. Welcome to a fantastic bull market, and we hope you get listed as soon as possible and appear first on Market Today and Business Today television to discuss your financials. Congratulations once again, and best of luck to both gentlemen.
Thank you.
Okay, gentlemen, let's get back to the markets. And at the moment, 21,180 for you. It's an uptick of 250 points. The Nifty is doing all it can to make it a fantastic trending day. A trending day on the markets is when you open gap up and you continuously, regularly during the day, build on that gap up. So it was a 184 point gap up, beyond which the index has added a further 50 plus 20, 70 points as far as the Nifty is concerned. And of course, this will be a record closing high achieved on the back of a very, very strong bullish commentary coming in from the US Federal Reserve about the US economy, where it plans to start cutting interest rates. But such is the connectivity across the world that the party was announced on Wall Street, but it is Dalal Street that is partying hard and partying as if there is no tomorrow. Apart from the Nifty, you have very, very strong gains coming in on the Bank Nifty, which is 47,711, again up 617 points. A sharp uptick happening here as well. And of course, the Nifty IT index right there in front of you, up in the vicinity of 3%. Remember, this was a 4-digit gain on the Nifty IT index after a long while, and 34,200 in front of you. This index had opened 500 points higher on gap up, and beyond that it has added another 600 points. So you can well imagine how desperate a rate cut necessity is for the global IT in America, because they borrow at minuscule prices, interest rates, and then they actively look at acquisitions. So when your funding cost comes down, automatically you look at better growth rates, and that's the reason why the Nasdaq celebrated last night, and this is the reason that the Indian global IT companies are doing phenomenally well. The other issue that has gone off the radar, and a major issue, is that the US market, the US economy was supposed to go into a recession given the propensity of higher and higher interest rates, but given the US federal statement on that rates will be headed down, so that worry is also out of the window. Let's look at the index heavyweight space. I want to see what is the contribution of several index heavyweights like Tata Motors as well as ITC and Hindustan Unilever. So 719 on Tata Motors, it's flat, 0.3%, 0.1% lower. Hindustan Unilever is right there in front of you on the screen. The counter at 25.15 is flat again, and of course ITC 460.35, up about 1%. So this is how the momentum is at the moment. We'll also look at the NSE 500 list in terms of wherever is the most volume coming in, and if you look at volume buzzers on NSE 500, you'll come up with some very unusual names. Mastech 6% higher, roughly 10 lakh shares have been traded. The daily volume today is 22 times the average 5-day volume on Mastech, and that goes on to show how this depth and anger of buying that is now coming on mid cap IT and IT stocks. We have Castrol Industries 148, 7% higher, about 1.55 crore shares have been traded, and this is 9.7 times the 5-day average as far as prices are concerned. Sudeep Shah is with us. He is the Deputy Vice President and Head of Technicals and Derivatives Research at SBI Securities. What a wonderful day to have you, Sudeep. Your view on the Nifty first.
Good afternoon, Shalji, and absolutely it's a fantastic day today, and we've created history. Like if you see again fresh record highs, and now this time it is more encouraging because Bank Nifty has supported, and Bank Nifty is last 3-4 days, if you see Bank Nifty 47,300, 47,400, that zone was acting as a resistance, and today that resistance has been taken out, and with huge volumes. And also what is better in terms of banking is that ICICI Bank, HDFC Bank and Kotak Bank, all three are supportive in this entire approach. So I feel that banking still has more legs from here on, and I feel overall 47,400, 47,450 will act as a support till this zone holds. 47,980 and a 48,100 can be witnessed in the next couple of sessions. And if we come to Nifty, now it's a massive move from Nifty IT, and we are seeing all these large cap stocks, whether it is Tech Mahindra, Infosys, they're all up by 3.5 to 4%. Even TCS is supporting and it's up by 2%. So the entire IT space, whether it is large cap, mid cap, all the IT stocks are right now partying. And I feel from the current levels also IT index can make a move on the upside, and that will support Nifty. So overall 20,050, 20,070 zone would act as a strong support from here on. This zone of 20,000 to 20,070, and on the upside we could see levels of 21,000, 21,300, 21,400.
Okay, so 300 and 400 are on the way, ladies and gentlemen. Remember, today was also the weekly expiry of the Nifty index and futures and options in that particular space. This also means that tomorrow a fresh weekly expiry will take root, which will end on December 21st. So a sharp uptick is what Sudeep ji is predicting. It's the last 15 minutes of trade, Sudeep. Anything you want to carry forward in the form of a BTST or, God forbid, STBT for tomorrow's trade?
That was amazing. God forbid. Now that was a punchline. But on a serious note, I feel a lot of stocks are looking good from here on. And one stock which is right now catching my attention is Exide Industries. Now, if you see, this stock has moved from 240 to almost it moved to 297 on December 5th. Post that it entered into a small consolidation, and today we are witnessing a decent price action here, and I feel that it's almost finishing off the entire consolidation, and has even bounced back from an important support zone of 285 to 87. So I feel till the time this zone of 287 holds on Exide, we could see much higher levels up to 315, 325 on Exide in the next few sessions. One more stock which is catching my attention is Tech Mahindra. Now, this was one IT stock which was not performing in the last 3-4 months. We had seen severe cuts also in between, but now with the kind of momentum that the IT stock is having, I feel this one is a big candidate for short covering. And from the current levels, if we see, this stock has now sustained about 1245, 1250, where it was facing resistance since October first week. So that resistance has now been taken out, and from the current levels, I feel 1230, 1235 zone would act as a strong support with a decent put writing also visible in at the money puts. So I feel upside up to 1310, 1320 is on the cards here in Tech Mahindra.
Okay, Exide is a wonderful stock to choose. Today's turnover is almost 90 crores on this one. About 30 lakh, actually 31 lakh shares have been traded, and the all-time high on this one is somewhere in the vicinity of, if I'm not sure, yes, 304. So there is a build-up happening, and very well put, Sudeep. One of those rare stocks that we don't talk about very often, but this is how it is, and a strong move likely on Exide as far as charts are concerned. Sudeep, I often ask this question these days. Would you have any words of sympathy for bears?
I guess we had discussed it last time also, and my reply will still be the same, Shailji, that there are no words for sympathy, because when the writing is clear on the wall, when you know that it's a roaring bull market, how can you even think of going short? Thinking of even going short is like a crime. So that's okay. Everyone has their own decision. And that's how the market functions. If there is one bull, there has to be one bear. So that's okay. Because of them, right now, a lot of investors are very happy as they were bullish. So that's fine. No other noise for this.
Okay, and this, ladies and gentlemen, is one of the founding principles of the market. It's okay to have an opposite view of where the market is trending, but remember, the market is always right. It does not matter what your view is. If the view of the market is opposite to your view, you need to change yours, because the market does not know you exist. Point number one. Two, even if you don't believe that the market at the moment is acting rationally, it's always better to be a fence sitter rather than trying to have two hands with the market, because the market can remain irrational longer than you can remain solvent. So if you're not liking this bull run, please sit on the sidelines, wait for a correction, and then probably do whatever you like. But this is definitely not the market to go short. We've been saying this for a while, but given the gap ups that you've seen on previous Monday when the election results were announced, that was a 300-point gap up. The markets have built on top of that, and today there was a 200-point gap up. The markets have built further on top of that. So 21,300, 21,400 is on the charts as far as the Nifty is concerned, according to Sudeep, and Bank Nifty is in the vicinity of 50,000, which you should see soon. Sudeep, anything that you find attractive in the large cap space? Of course, you've mentioned two good mid caps, which is Exide and Tech Mahindra. What do you like in the large cap space which will propel this rally higher?
See, there are a few stocks which are right now coming out of a lot of long consolidation, or few stocks which are even continuing their uptrend. So there are 3-4 stocks now. The first one is Infosys. Now Infosys we have seen after a long time, it is now trading above 1500. Almost I guess last it was in mid-October when the Nifty IT started its fall. So right now, if you see Infosys, there's a downward sloping trend line breakout happening there. And the charts are similar to Nifty IT also. So Infosys is one pick which I feel looks good from current levels. The second one is Ultratech Cement, TCS, and M&M. And not to forget the banking names, ICICI Bank as well as HDFC Bank, because all these stocks, if you say ICICI Bank or HDFC Bank or Reliance, these stocks, if you see, while Nifty is at all-time highs or it's creating record highs minute by minute, these stocks are still down compared to their 52-week highs. And significantly, if you see all the IT stocks also, when we are talking about TCS, Infosys, all these stocks are down anywhere between 10-15%. Few of them are down 5 to 7% when we are talking about the top large caps. So while Nifty is at all-time high, if out of these stocks, even if they start moving 3-4% from the current levels, imagine 21,500, 600 could easily be achievable. So that's what I feel, that now a lot of catch up will happen, a lot of revenge buying will happen. And I fully agree with one point that you just recently just made 5 minutes back, that it's okay to have a short view, but it's completely wrong to just try to go short when the market is rising. And one case in point here is that a lot of sectors or a lot of stocks, when you see their RSIs at 83, 85 levels, and we get a lot of when we speak to a lot of people, one common question that arises is that, sir, because RSI is at 83, 85, should we go short? And few of them have even gone. So just looking at RSI's overbought nature, one should not go short, and it could remain into overbought zone for an extended period of time, and that is the time when you make excellent gains, because the trend is very strong when the RSI is above 60, 70, right, and you need to wait for a confirmation even if you want to go short.
Right. So ladies and gentlemen, we'll take a very short break, and on the other side of the break, we'll discuss a couple of low ticket, high beta counters like Steel Authority of India, where the rally has just begun today. Do stay with us.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Okay, Sudeep Shah is with us, the Deputy Vice President for Technical and Derivative Research at SBI Securities, and we were discussing market psychology a couple of minutes back. Be that as it may, now we have just 6 minutes left for what has been a fantastic Thursday for the Nifty. A very strong momentum coming in. The Nifty in front of you at about 21,182. That's the latest price that I see on this one. 21,207. Okay. So we've jumped several digits today. We've jumped 21,000. We have jumped 21,100. And now we are closing above 21,200. What a spectacular day as far as the large caps are concerned. This is something that you heard before markets opened today, that tech will outperform, that it will be a big boy day, and it will be a trending market, and all three have panned out beautifully. Sudeep, coming to you, low ticket high beta item, Steel Authority of India. Today it is the top gainer in the F&O space, 110 rupees. This is the highest level since April 22. Where do you think the stock is headed? Should this momentum be chased? Sudeep ji, you are on mute. You will have to unmute yourself.
Yeah, absolutely, Shelji. I fully agree with you that we need to chase such breakouts, because what happens is that when the stock was in 1.5 year or 2 years of consolidation, when the stock is broken out of that, then in such crazy bull markets, any levels are achievable. So this is the time where you need to maximize the opportunities and not go conservative. And I feel the stock is on a tear, and it's very positively placed structurally when you see the daily, weekly, and monthly charts. And hence, I feel that daily and weekly were as it is positive in the last couple of days, but monthly chart has turned positive right now, because of right now it's sustaining above the April 2022 highs also. So I feel from the current levels also, levels of around 125, 130 are achievable. And one can use a stop loss of 102 for the same. And also, just to add to this point, it's not about sale. Other stocks like Nalco, a lot of other mid-cap stocks are also moving up, if not in the steel sector. So it's just a mid-cap rally which are related to the PSU space.
Okay. So Nalco as well as Steel Authority is what prefers as far as SBI Security is concerned. One more stock in the same space is NMDC. Sudeep, this one is also buzzing very, very strongly, 191 in front of you, and it's a secular rally that has started at about 121 rupees somewhere in September, and at 191 today. Is it overstretched on the charts? What do you think about NMDC?
Yes, if you ask me now, here with NMDC, there is a difference of opinion now. Yes, it is definitely overstretched, and I feel, but it's definitely not a time to go short. So I feel overall in the next 3 months, the targets could be around 220, 225. But as of now, the rally is stretched, and I feel a retest of 183, 185 levels could be a good entry point from here on to ride the rally from there on. But at least one should not go with over leveraged positions at such higher levels. Just wait for a small cool off, and then we could re-enter the stock, because the overall trend is strong. If you see NMDC, the stock is right now almost at the highest levels post October 2011 or July August 2011. The stock is trading at those highs. So it's a big consolidation breakout, but definitely after a consolidation breakout, it does retest its breakout zone. So I feel that 183, 185 levels should be retested, and that could act as a good entry point.
Okay, so that's the view coming in on NMDC. Ladies and gentlemen, just 2 minutes left. Sudeep, a very warm thank you for all the answers that you've given on the questions that we asked. Let me just wrap up the market for us all. A fabulous day as far as equities are concerned. The Nifty closing not only above 21,000, but now it's closing well above 21,200. So a blowout today, which essentially means that the gap up has sustained itself and gone better and brighter. 21,190 in front of you, 264 points higher. Bank Nifty 47,756, again a gain of about 664. Both these indices at a record high, and the supernova trade today was the Nifty IT index, 34,200, up about 1,100 points right there in front of you. Ladies and gentlemen, that will be all from our side. Remain tuned to Business Today Television for all your needs as far as the financial markets are concerned, and we'll be back again tomorrow morning with the same set of data and better stock ideas. Remain glued to BTTV. Thank you very much.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.